Hey everyone, and welcome back to another episode of Crypto Invest. So today is a pretty important day for Bitcoin because Bitcoin future contract is now launched on the CBOE. So let's get into it. So I have been following the launch of the Bitcoin future contract over the last few hours, and let me share with you what has transpired the last few hours. So as promised, Bitcoin future contract trading is launched on the CBOE as of around 5 hours ago, and the initial reaction is that Bitcoin price is going up. So as a start of the launch, there was a lot of demand for the CBOE website. People are trying to log into the website to look for information regarding to Bitcoin future, and as a result of that, it was actually crashed the website. So the website went down for I think about an hour or so, and now it is back up and running. So this is the CBOE website is up and running now. You can go in, you can get data related to Bitcoin future contract. In terms of price action, I want to talk starting from Friday night. So Friday night, all the way up until noon California time, just before the opening of the CBOE Bitcoin futures, the price for Bitcoin is fluctuating from around 13,400 to around 15,500. So it swings pretty violently throughout the weekend, and a lot of that has to do with the fact that the market just couldn't decide on what the price should be, because we were so close to the opening of the Bitcoin future contract. It is the first of its kind, so no one knows what to expect. Luckily for many of us, we are currently on Coinbase on an hourly candle. This candle here is the beginning of the Bitcoin future contract trading, and when it's open, Bitcoin was at 14,800, and it went all the way up to 16,300, and now it is trading at around $16,800. So it's up quite a bit since the start of the Bitcoin future contract. As far as how the Bitcoin future contract pricing is doing, you can go to cnbc.com, and the ticker symbol is XBT.1, and you can see that it's doing pretty well. It's up 18% since the launch of the Bitcoin future contracts. This website was pretty slow earlier today. I'm sure everyone is trying to get some data. Now it's working normal, and you can see that the future price of Bitcoin contract is a lot higher than the current price, over $1,000. So that shows you that there's a lot of optimism. The institutional investor and the big investor certainly, at this moment at least, they are thinking of Bitcoin future as pretty positive. So that's why you see that the value of the Bitcoin future contract increased. I do want to say that there is a loose correlation between the Bitcoin future price versus the current Bitcoin price. This, however, definitely can be served as a benchmark, right? Typically, similar to other market that we have seen, like the Dow Jones futures before the market open, or the S&P futures before the market open. The market typically open in the same direction as the futures. So I'm hoping that this can be the same situation here. So far, they are related in the sense that Bitcoin future value go up, the value of the actual Bitcoin also went up as well. So let's see if that's true. Simply not enough data here to make any kind of analysis or decision. I think we will need to have at least a few days of trading so we can know exactly what kind of impact we are expecting from the Bitcoin futures. Now, I also want to say that this is for CBOE. And next week on December 18, the CME is gonna launch their own Bitcoin futures market, and that in my opinion is a much bigger market. So whatever happened today, I think it's gonna magnify next week. Basically, I did get a lot of questions regarding to Bitcoin futures. This is a very good article that I can link in the description below. How is that work? So how is the Bitcoin future contract works? So this one is particularly about the CME, but the mechanic is the same for the CBOE. The only difference is that each contract for CME is 5 Bitcoin, and each contract for the CBOE is 1 Bitcoin. So let's see what you need to know. So you need to know that each contract is composed of 5 Bitcoin for the CME and 1 Bitcoin for the CBOE. Each tick, which is the minimum fluctuation, will be $5 per Bitcoin, amounting to $25 per contract. This is true for CME contract because each contract is 1 Bitcoin. 5 Bitcoin times $5 is $25. That's why you have this here. But in the case of the CBOE, you just need to know that it's only have 1 Bitcoin, so only $5 per tick. So what this really means is that, just say that Bitcoin is $16,003. The exchange will not recognize $16,003. The exchange is gonna recognize it as $16,000. If you have $16,005, then the exchange will recognize the current price as $16,005. So that's the minimum that each tick will provide in terms of fluctuation is $5. Bitcoin future will trade on the Perspective platform, and there is a time on that platform. So for example, for the CME, the trading is going to be 5 p.m. to 4 p.m. Central Standard Time from Sunday to Friday. Anything after that is considered after hours and it's traded electronically. Similarly, the CBOE will have similar time schedule for their trading platform. So this is not a 24/7 kind of market. There is a spot position limit of 1,000 contracts. Future contract always have limit on the number contract one person or one entity can own. This is to prevent someone from being able to corner the market. Pretty straightforward. They don't want someone to hoard a lot of contracts and being able to manipulate the market. Bitcoin future will have a price limit of 20% above or below the prior settlement price. The price settlement will be based on the Bitcoin reference rate, and this reference rate is going to be different for the CBOE, which is what we are looking at here. The Bitcoin price you got referencing is going to be the special index that Gemini Exchange put together for the CBOE. So it's not going to be your standard Coinbase or Bitfinex price. It's going to be the special index that put together by Gemini. And what you need to understand, the most important thing is that the contract is settled daily at 4 p.m. London time, and everything is done in US dollars. So there's no Bitcoin involved at all in this transaction. This market is simply a way for the institutional to bet on the future of Bitcoin without owning Bitcoin. So a lot of people asking, like, why go to this trouble? Why don't they just buy the Bitcoin itself? Why go to all the trouble to trade Bitcoin future contracts? Well, that's a lot of reasons why. So Forbes put together this article explaining why Bitcoin future are better than Bitcoin for institutional investors. Number one is pretty straightforward. Big financial firms understand futures, right? They know how future market works. They trade the future market all the time. We do have the S&P 500 future, the Dow futures, pork belly futures, etc. So they know how this thing works mechanically. They don't know how blockchain works most of the time. They don't know how Bitcoin works in terms of private key, public key. So this is a lot easier for them to understand. There's a preference guide. The contract will be settled each trading day using a transparent reference price. That reference price may not be perfect, but it will soon get written into the contract that involve Bitcoin being paid or received as happened in other markets, meaning that they can settle everything using the preference price without worrying about buying and selling Bitcoin. So they don't have to go into the market, buy or sell Bitcoin. The future contracts don't go missing. So, this is meaning that when you hold Bitcoin and if you lose your private key, game over for you, right? There's no way for you to recover that Bitcoin. But future contracts don't go missing like that. So the safekeeping is a lot easier. You can easily bet on the client prices. This is also known as short selling. So right now, if you believe that Bitcoin is overvalued and you want to bet against Bitcoin, there's not a lot of way you can do that. Some exchanges allow you to short Bitcoin, but typically you have to put in a lot of margins. You have to pay high fees, and especially you have to pay for the interest rate because you're basically borrowing Bitcoin to trade against that. And most importantly, it is regulated. It is regulated by the Commodity and Future Trading Commission, the CFTC. They do some, they do provide some oversight in this market, and this can prevent market manipulation to a certain extent. Unlike the Bitcoin market, which is very highly unregulated. Yes, I understand that exchanges are regulated under the country that it's currently in. However, there's no one regulatory body that can regulate the Bitcoin market. So manipulation does happen, whether you believe it or not. And right now, not a whole lot you can do about that. But a lot of that will be less, I think, in the Bitcoin future market, because the CFTC will have all the rules in place. One of the rules that they're gonna have is called the circuit breaker rule, which I think that we hit earlier today when Bitcoin gone up a lot. And what that basically saying that when Bitcoin go up or go down over a certain percentages in a certain time frame, so within a few hours, if Bitcoin go up 30%, then all trading stop. The reason why that happened, because they want everyone to stop trading, digest the news, think about whether or not you should buy or sell, and then when the market resumes, you can make a rational decision. And it to basically prevent panic sell and panic buy. In the traditional market for Bitcoin that we are currently in, there's no circuit breaker, right? The Bitcoin can fall to whatever price, and we have seen this happen with Ethereum before, when there was a typo in the selling price, would cause Ethereum to go down from I think 300 all the way down to like 180, and then because of that, it caused a lot of people to panic and panic sell, drive Ethereum all the way down to 10 cents, and then it recovered right after that. With the circuit breaker, you can avoid a lot of that because the market will just halted trading. So that's another benefit. The most important thing is that, I should say two most important things about Bitcoin future that you should get from this. If anything, these are the two things you should take away. Number one is serve as a sentiment point to understand what are the institutional investors think about Bitcoin. Right now, they think highly of Bitcoin. That's why the value of the futures have gone up in price. And number two, it's gonna pave the way for future products such as ETF, exchange traded fund, where you can buy and sell these funds. They act like a mutual fund, but they can be traded on the market. Those funds can be backed by real Bitcoin, meaning that the fund can hold X amount of Bitcoin and then they can issue shares against these Bitcoin, and the investor can buy the share versus buying Bitcoin directly. And the reason why they do that is because they may not want to deal with safekeeping Bitcoin. They don't want to worry about paper wallet. They don't want to worry about a hardware wallet. They don't want to worry about private key. So that could be the reason why they want exchange traded fund. But that's going to be a huge thing for Bitcoin, and Bitcoin futures success will pave the way for that product to be hopefully by next year. And that's when I think you will see huge adoption in terms of investing into Bitcoin. In terms of other news, not a whole lot of news over the weekend. Of course, Bitcoin future value is kind of like overshadow everything else, the Bitcoin future contracts market. And the other news we do have is that there are continued report, and the latest one regarding to CryptoKitties, that the sale hit $12 million as of now. I mean, this has risen quite a bit. It was $1 million last week, and now $12 million. And it was reported that the 5 of the rarest CryptoKitties, which is these digital cat that you can buy using your Ethereum on the Ethereum blockchain, using CryptoKitty.io. I talk about this a little bit on my other video in detail, so if you don't know what this is all news to you, take a look at that video. It's going to explain to you what this thing is. But basically, you buy and sell these electronic cats on the Ethereum blockchain using Ethereum. And right now, they are going, the top 5 rares are sold for over $100,000 each. And the most expensive sold for about $120,000 which is utterly insane for electronic cats. But it does put Ethereum at the center of a lot of this discussion lately. So overall, I think this is a interesting use case for Ethereum. Some people call this could be the Ethereum's killer app after all. I'm not sure about it. I think this is the beginning of what it could be. as far as the market recap, I mean, this is a pretty good day for cryptocurrencies. Up 443 billion US dollars so far. Total market cap, everything is up. Basically, the top 100 is in the green today. You can rarely find anything that have any negative, and when they do, you will see that they are down less than 1%. So pretty good day for the market. Ethereum is doing fairly well, holding steady at 461. IOTA is still holding strong at above $4. Litecoin holding strong above 150, and even Bitcoin Cash is up 33% today. So I was pretty surprised by that. So that's all I have for you in terms of update. I hope that you find the information in this video useful. If you do, hit the like button so other people can find the information, and subscribe to the channel as well if you would like to get more information from me in terms of news and update. I will keep an eye on the Bitcoin futures and of course update you with any changes as necessary. So with that, thanks again for watching, and I will talk to you later. Bye bye.